Terry Kaim, and I'm Global Director of Sales Strategy and Execution for LSEG's Pricing Reference Data business. It's a pleasure to be hosting today's session. In this episode, we will be exploring the challenges faced in the digital asset market and how these challenges are being shaped and approached as the industry continues to build data sources. I'm delighted to be joined today by my colleague, Kristen Mierzwa, and who is head of digital assets at FTSE Russell, which is an LSEG business, and Doug Schwenk, CEO of Digital Asset Research. Welcome to the both of you.
Thank you.
Thank you.
Okay, so we decided last minute to adapt our agenda to cover the impact that Silicon Valley Bank's collapse going into FDIC's receivership is having on the crypto digital asset space. Silicon Valley was the nation's 16th largest bank when it went under last week. It was clearly, it's had ripple effects across the markets, and you guys all know that. USDC, a stable coin used in the pairs to aggregate the FTSE dollar prices, breached the dollar peg after it revealed it had $3.3 billion in reserves at Silicon Valley Bank. So we think today is a fantastic opportunity to take a closer look on the financial impact and how the industry is dealing with the existing market conditions and how we're combating the challenges that are arising as a result while looking for the future of this market. Kristen and Doug, what can we expect from the digital asset markets, considering the FTX fallout in 2022 and the impact from the fallout of SVB just last week? What do you guys think?
Doug, do you want to start, and then I'll come in after you?
Yeah, sure. So I can expect to see a lot of volatility and continued response to the macro environment. I think it's really interesting to see just the price of Bitcoin going from sub 20,000 on Friday, and the belief that the failure of SVB would be negative for crypto markets and markets in general. And then, of course, with the government backstopping SVB and potentially putting rate hikes on hold. In doing that, the macro environment's been encouraging, and among other forces, that's driven Bitcoin up to 26,000 now, which is a pretty substantial some fallout from FTX and associated stresses in the crypto markets as people learn what are reliable and trustworthy counterparties and firms to face off with. So those challenges are not over yet.
Yeah, and just to kind of add on to what Terry was saying about SVB, so as soon as something like that happens, of course, emailing or texting Doug right away to say, hey, how does this impact our FTSE DAR price? So I just wanted to remind everybody how our price works. So it's an aggregated derived price from 10 exchanges right now. That participating exchange list changes every quarter as we vet the exchanges. And the price is aggregated from different pairs. So we're looking at executed spot of 4 different fiats, 2 stable coins, and 2 digital assets. And one of the stable coins is USDC. So maybe, Doug, you could just talk about what, if any, impact was there when USDC depegged to the FTSE DAR price?
There was no impact in terms of price fidelity and price quality, because as the price of USDC changed, we incorporate that in calculating, what is the USDC to Bitcoin price, for example, when calculating the price of Bitcoin, and that's no different than any other FX rate or similar that we would use. As that price dropped from $1 or roughly $1 down to 90 cents, every time that we were calculating the price, we're incorporating the effect of that change in USDC price, which is what we would want to do in keeping the price as robust and reflective of the market as possible. We are still, according to the methodology, removing outlier prices. So based on a standard deviation test, removing those that are outliers. And we've seen this sometimes where a particular exchange with a particular stablecoin or fiat will have a lot of outliers because those fiat prices are not well arbitraged, and we'll remove those algorithmically just to keep this reference price as robust as possible.
Yeah. Thank you.
Yeah, an interesting question. You did bring up the swing in Bitcoin and Ethereum. Do you find that investors are looking at this as sort of another safe haven?
Possibly. I think there are a set of investors, and especially in retail, who see Bitcoin as a safe haven. There's definitely a group who, you see it as the new digital gold, and put money there. I think we have seen a lot more correlation to traditional markets in the recent past than we did maybe 3 or 4 or 5 years ago. Those correlations are often driven by the amount of institutional money that are in these markets, and they're reflective of views on macro policy, interest rates, et cetera, as well as the tech sector. And so I think we're seeing some of that lifting Bitcoin prices today, as well as markets in general. But I think the safe haven argument is really kind of resonates most with those who are, I'm going to say, believers in Bitcoin as a store of value.
Fantastic. Let's go to a question here for you guys. Considering the challenges faced in the industry, I mean, what are we doing to solve for them? How's the market reacting to the challenges? Is the market shrinking? We're going back to probably the same sort of question I just asked. Are investors still confident? Are there any stats or numbers you guys want to talk to about the digital asset industry?
I would say from our perspective as a specialist provider of data and research to institutional clients, we're not seeing a diminishment in interest and business from our client base. Many of them have a long-term view and have been building capability to trade and store and invest in these assets for a long period of time. They make money when markets go up and markets go down. There's definitely interest in a certain set of customers and end investors, especially when we look at those who are a little bit younger. Having crypto assets in their portfolio is important, or having exposure as part of their strategy is important. I think one of the things that we're seeing now is a real focus on risk management and counterparty credit risk, and how do we make sure that we understand those that we're facing off with. And so across our client base, there has been a real strong demand for the work that is done to vet and to really understand the financial situation, the exposures, the controls, the conflicts of interest, et cetera, with these counterparties, and to make sure that you're transacting with firms that you can trust to give you reliable, good prices, and not lose your assets in the event of some extraordinary event.
And Terry, another question that Doug and I have been getting a lot is, do we classify digital assets as a security or not? And the reason people are asking is because depending on where they're offering a product, they then will be have to follow the regulations in that particular area for that product wrapper. So right now we are not classifying something as a security or not. And I think another thing to just remember when you're thinking about digital assets is this is truly a global asset class, right? So we could see a time where where some digital assets are considered securities by the SEC here in the US, but then they'd have a different classification, in Europe or in different countries. So what I think we're going to need to do is what we would always do is add that kind of market infrastructure and transparency to the asset class. And if these things start to happen, of course, we'll keep track of that and try to make it easy for our clients in some sort of data file. But there'll never be a global classification of, yes, this is a security, or yes, this is not. Because they're not primarily listed anywhere. But that comes up quite a bit, I'd say, as the challenges where people are trying to think through product structure. How do I do this? How do I future-proof it? Which I think is a really good indicator of where people are with this asset class, that they're not backing away, but they're trying to figure out, like, how do I, build something that can stand the test of time?
Yeah, it's interesting because I've been thinking about it. There's, Doug talked a little bit about, the retail investor buying. We know there are a lot of smaller starter hedge funds that are investing and building, portfolios and strategies around that. Are you finding larger institutional hedge funds buying into assets, keeping them? Like, what is the response that you guys are seeing from the market?
Doug, you're the hedge fund guy.
Yeah, as a former hedge fund guy, we do talk to a lot of these larger hedge funds, the names that you'll all read about and be familiar with, and many of them have trading desks set up, have portfolio managers identified, have strategies that they are working on. Now, some are actively managing money in the crypto space, and some are working on capabilities so that when and as there is the right opportunity for them, they can move quickly into crypto assets. Mm-hmm. I remember sitting on a trading desk at a hedge fund, and the portfolio manager would come into the trading room and say, "We're going to buy bank debt tomorrow, and you've got to figure out and be ready and be capable of doing that trade." And I think the same thing is happening in crypto. Those hedge funds of any reasonable size that aren't investing in crypto today are thinking about how they make sure that they're ready when and as it becomes an important investment for a particular portfolio manager.
Great. We have a series of questions already in the queue. Mm-hmm. So why don't we tackle a couple of them? Question number one: what kind of data do you have outside of pricing data? What do you guys offer?
So we have a number of different data products. Prices are the foundation of many things that need to get done. The FTSE indexes, for example, crypto indexes, for valuation, all sorts of reasons that you need to have a good, reliable price. We've got pricing data, we've got reference data, and so I think about in traditional assets, you want to have kind of security master data that you can use to categorize assets, to track them, to ensure that you have identifiers, exactly what you have, and features of a particular asset. We've got yield data, especially around staking and lending, two very important sources of additional return in a portfolio of crypto assets today, with proof of stake being a very interesting way to add some return to a crypto asset. We have data around events. So in traditional assets, we might think about corporate actions. In crypto, we have things like hard forks, soft forks, chain splits, things of that nature that can create opportunities to realize additional value, or to at least make sure that you're able to hold and transact and store these assets safely. We have blockchain data, which can be useful in kind of a fundamental analysis of crypto asset. How strong is the network? We have data for risk assessment of assets as well as counterparties. So as you're thinking about credit risk in the space, how do you make sure that you can measure and monitor the risk worthiness of your counterparties? Those are some of the data sets that are more interesting at the moment to clients, but really do try to bring a comprehensive set of market data for investors and institutional players.
Yeah.
Uh-oh. I think Terry paused. Did he pause for you too?
Yep.
Okay, well, I'm going to ask you a question, Doug, or something you kind of went over really quickly, but tokens and issue is a big one as well. And you guys supply that to us. And it's one of those things that you kind of take for granted, but to calculate a circulating weight or a market cap weighted index, we need that data point from you. And it's incredibly important because it drastically changes the percentage weight that you would allocate to an asset. So don't forget that in the lineup of things you guys do. And I think, your data coverage is pretty incredible. We take in 350 assets, but I know you cover 10,000 assets, including NFTs and things like that. So I just think the depth of the coverage is, huge. Terry, you're back.
Yeah, I'm back. I don't know if I got that. I was talking to another question that we had on screen here, and I'm not sure if you guys got to hear it. But the question was, in the theme of regulation, risk management, you were talking about. Do we find, again, is this digital asset space going to be regulated at some point? And how are people mitigating, I guess, risk management of all the stuff we've seen over the last year? Some things are working well with Bitcoin and others, but some of the more, I guess, destabilized ones are having some issues. Like, where do you see the market going with that?
There's no doubt there's going to be more regulation than there is today. As an asset class or as an industry, crypto is lightly, if regulated at all, in many jurisdictions. But we see the chair of the SEC, Gensler, taking a more aggressive approach to crypto assets and wanting to apply securities regulation to as many as possible. We see a framework in Europe called MiCA that will likely come into effect sometime this year, that will regulate a lot of activities in crypto. There certainly is interest in a regulated framework in the UK and other jurisdictions. And so we're anticipating that the next 1 to 3 years we'll see a lot of regulatory change, regulatory clarity. I think we're also going to see a lot of assets that are launched in a regulated wrapper or done in a regulated fashion. Real securities, maybe tokenized real world assets is another way to think about that. And the blending of what are crypto assets that are just on the blockchain with assets that may be real, the mix.
Uh-oh, I wonder if I'm the one.
Okay, Tammy.
Did we lose Terry again?
I think so again. And I keep thinking it's me.
No, I think, can you guys hear me?
Yeah, now we can.
Okay, am I back?
You're back.
You're back.
I hope so. Yay. All right, so there's another good question here that I want to talk to you guys about. All right, so Gabriella asked, do you have, or is there a forecast for crypto arbitrage performance? Who wants to take that?
Good.
Do we have an answer to that?
I think first of all, we're not in the business of forecasting. Anybody who will forecast, performance in crypto markets is probably, well, they got to be smarter than me, and they're probably going to be wrong. Arbitrage in crypto has gone through some changes with the collapse of FTX and Alameda and some of the trading firms, and so there is probably less arbitrage happening post FTX than there was prior to FTX, and so price efficiency dropped a little bit, but we see that picking back up pretty aggressively, and arbitrage as a strategy in crypto has been very profitable for a lot of the trading firms who are both in some cases making markets and in other cases just taking advantage of these dislocations to, collect pennies, but they add up very, very quickly.
Yeah. So let's pivot to a regionalized position here. So when we're talking about the Americas, Asia, EMEA, what are some of the regional considerations that we need to take into account?
Well,
What do you guys think
maybe
about that?
Yeah, maybe I'll start with our prices. So they're EU BMR compliant. And when I first started working on this project, I didn't even know that a price could be EU BMR compliant. I always thought about that around indexes. But because our prices are aggregated with a transparent methodology, they are considered, something that can be EU BMR regulated. And that was really important to us. So those reference prices are produced 24 times a day. On right now, our benchmark assets have 50 assets in them. As of this Friday, it'll be 65 assets. And we, again, produce rates for the other 300 assets. And then our indexes are also EU BMR compliant when derived from that starting universe of those prices that are BMR compliant. And again, in the US, it doesn't always translate, but I think you can think of it as that FTSE International Limited is the benchmark administrator. So all the compliance and governance that you would want wrapped around a calculation that was being provided to you is there. And our job is to stand up when, the markets change, things happen, and you need to come to us as the administrator and say, hey, what's going on here? How are you going to handle this? So that's one regional kind of consideration, especially in Europe. I don't know, Doug, if you want to touch on any of the other regions or things that we think about.
I would first just echo what you said about BMR, how important that is, because most of these exchanges are not regulated. Relying on a price from an exchange is a challenge for a lot of firms, but the regulatory wrapper of BMR gives more confidence to those who need a reliable and robust price that you can't get from the New York Stock Exchange or somebody similar. We do see a lot of interest in yield strategies, in staking yield strategies, I think especially in Europe, where the innovation around listed products has been stronger. More things coming out of the Swiss market, out of Germany, out of the Nordics that have listed ETPs for crypto, and as Ethereum has moved to proof of stake, that has created a real substantial market opportunity to bring sizable returns to a total return product, and I think we're going to see a lot more proof of stake ETPs in Europe in the near term. I think it's also going to be really interesting to see what happens in Hong Kong, where there's now an opportunity for retail to buy from regulated exchanges, Bitcoin and Ethereum at least, or that's coming soon, and we expect that will create a more robust environment for purchase of these assets by retail when you can buy it from a regulated exchange rather than unregulated or lightly regulated exchanges. So I think we're seeing some good evolution both in Europe as well as Asia.
Agree.
Do you guys? I mean, with the fallout with FTX, things like SVB happening this week. Do you find are we growing? Are we still growing in the space with new tokens, new assets? Are they still coming out at the pace that they were, a year or two back? More a simple question for me.
They're still coming out. I think some of the activity has muted a little bit. Like the NFT market, for example, I think is not quite as frothy and exciting for people right now as it was maybe a year or two ago. But on the fungible crypto asset side, we see constant evolution, constant interest in new assets, and we're tracking over 11,000 fungible crypto assets today, and that number keeps going up every week. In part of that's because there are new assets coming. One of the biggest evolutions that I expect to see this year, or we do as a firm, is substantially more tokenized real world assets. And so whether that's a tokenized share of a private equity fund, or a token that represents your Apple stock, or a fractional piece of real estate, or there's a lot of different experimentation going on, but I think we're going to see a lot of that happening, and that's going to explode the space, both from a market cap perspective as well as available assets. And then you can start to get the benefits of crypto 24/7 trading, near real-time settlement, the ability to transact in a trustless way. Lots of the benefits of crypto can be applied to other assets.
Yeah, Terry, this isn't exactly an answer to the question you just asked, but kind of ties everything together. The questions we're getting from our clients aren't all the same, and it's great, right? To see everyone's coming at this asset class from a different point of view. So I've got some people who are like, I don't care what the intrinsic value is of the asset, if I can trade it, if there's volatility and it's not completely correlated with everything else, or there's yield, I'm interested. And then I have some clients who are really want to dig into the intrinsic value, and they want to see the use cases or the utility out of the different digital asset protocols. So you've got all of that. And then some people are just like Bitcoin only. So we're talking to lots of people who are still wanting to issue that wrapper so that their clients don't have to go open a wallet, and they'd rather have it in the same kind of product wrapper that they have the rest of their portfolio in, whatever that might be, an SMA, an ETN, someday maybe a spot ETF. But, and then there's, again, on the other side, I have clients who are already thinking about option strategies, or can you overlay factors on top of your digital asset universe? They're really thinking about the same kind of framework that they would use with other asset classes with this asset class. So it's a pretty wide spectrum.
Yeah, that's a great dovetail into, I guess, my next question. You're telling us about the use cases for our clients. How are we helping between FTSE DAR, digital asset research, our combined joint effort? How are we helping those clients?
Data.
Data.
One word answer, data. No, I think it really helps if people can see the data, right? It kind of makes it come to life. What are these things? What are these protocols that you're trading? I think education helps a lot too. I know Doug's team has incredible in-depth research reports on the different digital assets. And again, when I first started doing all this, I didn't really understand that they're not all digital currencies, right? So you start to figure out, they have different objectives to be a smart contract platform, or, when we first started working together, NFTs didn't even exist. So I'm pretty excited to see what else will come about, right? It just keeps evolving, the use cases. Doug, how would you add on to that?
The only thing that I have learned in the last 6 years of being professionally in crypto is that I don't know, and it will be interesting, and it will be different, and it will be exciting. The space is constantly changing. But I think in terms of how we help our clients jointly, it is about data, and that data is super important that it is of highest quality. When I think about being a buyer of data in traditional markets, equities, fixed income, et cetera, data quality is such a huge problem and challenge for institutional clients. I think that's one of the things that we're doing really well here, is bringing that highest quality data to that meet the expectation of an institutional client.
Great. On the board here, I'm just curious if there are any other questions as we're sort of wrapping up for today. Please let us know. Okay. I guess there's another comment. How How tested and how good is our data?
Well, it's you know, we're going to toot our own horn here and say it's pretty good. In fact, it's best of breed. We spent the last 5+ years perfecting how we identify good sources of data, clean that data up, and make that data robust. And those 5 years have been spent doing a lot of interaction with institutional clients, with regulators, and delivering this data 24/7 on a ticking basis, and really making sure that we can stand behind the data that we do deliver. And in the early days, there were lots of hiccups. There have been hiccups along the way, but that process of really baking in the way we clean the data, the way we QA it for quality, I think have given us a real advantage here in terms of data quality. One thing that's true in crypto is there's lots of data available, and separating the signal from the noise, getting rid of the garbage, is a huge challenge for firms, and something we've got a lot of joint experience as partners in doing.
Great. Thanks, Doug. Thanks, Kristen. With that, this brings us to the end of the live stream. I want to thank everyone who came and participated, and the audience for coming today. This is a helpful session. Hopefully, you found some value in it. If you'd like some more information on how FTSE and Refinitiv, both LSEG businesses, are working alongside with Doug's company, Digital Asset Research, to provide data to firms that need to identify opportunity to invest, to value the asset class, please click the link below, which will take you to the FTSE DAR website, or search Refinitiv FTSE DAR. Again, many thanks for joining, and we hope to see you soon, and have a great day.